If you really want to get a feel for the West Coast economy, you could pore over job reports, or you could look at something way more fundamental, where people are living. So today, that's exactly what we're going to do. We're taking a health check on the West Coast by diving deep into the Q4 2025 earnings report from one of its absolute biggest landlords, Essex Property Trust. Let's get into it. So, who is Essex anyway? Well, think of them as a massive real estate company, a REIT technically, that owns a ton of apartment buildings all up and down the West Coast. We're talking prime spots in California and the Seattle area. And because they house so many of the region's workers, especially in the tech world, their financial performance gives us this amazing on-the-ground look at the health of these huge economic hubs. Let's see what their latest report card says.
All right, here's our game plan. First, we'll check out their 2025 report card to see how they did. Then, we'll dive into a tale of three very different markets: Northern California, Seattle, and Southern California. After that, we're going to peer into their 2026 crystal ball to see what they're forecasting. And finally, we'll tie it all together and talk about why any of this really matters for the West Coast economy as a whole.
Okay, first things first, let's look back. Think of this section as the official performance review for 2025. How did Essex, and by extension their key markets, actually hold up? Well, the big headline numbers tell a kind of mixed story. On one side, they just barely missed their profit goals, their earnings per share. But, and this is a big but, they actually pulled in more cash than anyone expected, beating their revenue forecast by almost $5 million. So the money's coming in the door, even if profitability was just a hair off. Now, check out this number. A 96.3% occupancy rate? Wow, that is a seriously powerful signal. It tells us that for all the talk about people fleeing the West Coast, demand for apartments in these core cities is still incredibly strong. I mean, for all intents and purposes, Essex's buildings are full. And it's not just renters who are feeling confident, investors are too. In 2025, an absolutely staggering $12.6 billion worth of big apartment deals went down in Essex's markets. That's a 43% jump from the year before. So yeah, big money is definitely flowing back into West Coast real estate. And this quote from the CEO, Angela Clayman, adds some real color to the story. She's pointing out that they've gotten delinquency, that's just a fancy word for unpaid rent, back down to where it was before the pandemic. This is a huge sign of a stabilizing economy and just plain good management. It feels like the chaos of the early 2020s is finally starting to fade. But here's the thing. The West Coast is not one single market. Not at all. Performance was wildly different depending on where you looked. So let's zoom in and get to our tale of three markets. This is where the story gets really interesting. First up, we have the undisputed champion of 2025, Northern California. The Bay Area's comeback isn't just happening, it is absolutely leading the charge and blowing past everyone's expectations. So you have to ask, why? What's going on? Well, for starters, venture capital funding, a key sign of future tech growth, basically doubled in the fourth quarter. And get this, 2/3 of that money landed right in the Bay Area. On top of that, for the first time in years, companies actually leased more office space than they got rid of. You combine that with the fact that almost no new apartments are getting built, and boom, you've got the perfect recipe for a landlord's market. Okay, next, let's head up the coast to Seattle. This one is a much more complicated story. It's a market that's literally being pulled in two opposite directions at the same time. So here's the tug of war. The push is coming from giants like Amazon and Microsoft, who are getting really serious about their return to office policies. That pushes workers back into the city, and they need apartments. But then you have the pull, that constant drumbeat of tech layoffs that creates a ton of uncertainty and makes some people pack their bags. This push and pull makes Seattle the real nail-biter, the one to watch to see which of these forces wins out. And for our last stop, let's head down to Southern California. If Northern California is the sprinter, then SoCal, especially LA, is the marathon runner. There's no dramatic boom here. Instead, it's this slow, steady, gradual healing process. And the key number to watch here is economic occupancy in Los Angeles, which just hit 94.7%. Now, this number accounts for both empty apartments and unpaid rent, and it is so close to that magic 95% level that the industry considers stabilized. The second they cross that line, landlords get a lot more power to raise rents. SoCal is right there, right on the edge of a big turning point. All right, so that's the story of the past and the present. Now let's pivot and look into the company's official crystal ball for the future. What do they think is coming in 2026? And this is where things get a little weird. After that really strong 2025, Essex is telling everyone that its main profitability number, something called funds from operations, or FFO, is going to have zero growth in 2026. Flat. That makes you stop and think, right? After everything we just talked about, the strong demand, the packed buildings, the recovering markets, why on earth would they predict a totally flat year? It feels like it goes against all the positive signs we just saw. Well, the answer comes down to some finance jargon, a structured finance headwind. Basically, there's a separate investment portfolio they run that's seeing some cash pulled out, and that's creating this temporary, artificial drag of about 1.8% on their growth. So the key thing to get here is this. The flat forecast is not because the apartment market is weak. It's an accounting thing. The actual underlying business is still growing just fine. And this chart of their rent forecast is the proof. They expect rents to keep going up in every single one of their markets in 2026. And would you look at that? Northern California is right back on top, projected to lead the way with really solid growth in the mid-3s to 4% range. It's still the engine of this whole operation. So we've looked at the numbers, we've toured the markets, we've peeked at the forecast. Let's step back now and connect all the dots. What's the big picture here? What does this all mean for the entire West Coast? If you boil it all down, this whole report gives us three huge takeaways. First, housing supply is king. With almost nothing new being built, existing landlords have a massive, massive advantage. Second, the tech recovery is happening, but it's cautious. The investment money is back, but companies are still being careful about going on big hiring sprees. And third, return to office is not a suggestion. It is real, it's being enforced, and it's a powerful wind at the back of the rental market. And all of this leaves us with one last really big question to think about. Essex is predicting that the number of new apartments being delivered is going to drop by another 20% in 2026. So in markets that are already incredibly squeezed for housing, what happens when the faucet of new homes slows to a drip? It really makes you wonder, are we watching the West Coast walk into a brand new and maybe very long era of housing scarcity?